Hey everyone, I'm Lise Garcia, your friend in finance. Let's talk about something super important today, your emergency fund. Did you know that over 1 in 4 Americans have savings below $1,000? That's a bit scary, right? Imagine your car breaks down or you suddenly lose your job. What would you do? In this video, we'll tackle one of the most crucial steps you can take to secure your financial future: building an emergency fund. If you don't have one, even a small setback can quickly become a financial disaster. But don't worry, I've got you covered with a simple plan to build your own emergency fund fast in just 7 easy steps, plus a few pro tips. Let's dive right in. First off, let's set the stage with some interesting and shocking data. According to Forbes, total U.S. personal savings amounted to $802.1 billion. This does sound like a lot, right? But when you break it down, the personal savings rate is just 4.1%. And that's pretty low, especially with the cost of living continuing to rise in the United States. From 1971 to 2023, interest rates have averaged 5.2% and peaking at 20% in March 1980, and then hitting a record low of 0.25% in December 2008. Now in 2024, 49% of Americans are saving the same amount or less than last year, while 46% expect to save more, and amongst them, 24% are focused on building up emergency fund. Now, generational differences also play a role in how people save. Despite the uncertain state of the economy, many Americans are taking proactive steps to protect themselves financially. A report from Northwestern Mutual found that nearly 64% of respondents are cutting costs, 50% are building savings, and 41% are delaying large expenses. Interestingly, 56% of Americans who experienced financial regret in 2022 cited not saving more money as one of their top 3 misgivings. Meanwhile, 57% of those who experienced financial success named increasing their savings as one of their top 3 triumphs. So what can we do to stay ahead in our saving strategy? The first and most crucial step is establishing a bulletproof emergency fund, separate from your savings and your investment account. So what exactly is an emergency fund? It's a cash reserve set aside for unplanned expenses or financial emergencies, like car repairs, home repairs, medical bills, or a loss of income. Now, research shows that individuals who struggle to recover from a financial shock often have less savings and may rely on credit cards or loans, leading to debt, which then becomes much harder to pay off. Having an emergency fund is crucial to avoid these pitfalls. How much money do you need in an emergency fund, you may be asking? Well, the amount depends on your unique situation. Consider your past unexpected expenses. Whether you have kids and your lifestyle, this will help you set a goal for how much you need. If you're living paycheck to paycheck, even a small amount can provide some financial security. Here are some 7 crucial steps to start building your emergency fund. Number 1 is set your goal. Calculate your monthly expenses, your rent, utilities, groceries, insurance, and so on, and multiply that by 3 to 6 months, and that is your target. For now, you can start with a milestone of $1,000. It's a manageable amount and a great start. Then you can cut unnecessary expenses. Examine your spending habits. Are you eating out too often? Are you subscribed to services you rarely use? Cut back on these and redirect the money to your emergency fund. This may be tough, but remember, it's only temporary. Automate your savings. Set up an automatic transfer from your checking account to your savings account right after you get paid. This way, you won't even miss the money because you won't see it in your checking account. Even $50 a week adds up to $200 a month. And a Forbes study revealed that 44% of Americans use recurring transfers to save automatically, which means 38% allocate a portion of their pay directly into their savings account. And then 35% are manually transferring their funds. Whichever way you decide to go, use what's best for you. You can also increase your income. Look for ways to earn a little extra cash. This could be a part-time job, freelance work, selling items you no longer need, or gig economy jobs like driving for a rideshare service. All the extra income should go straight into your emergency fund until you've hit your goal. Next, you save for windfalls. Did you get a tax refund, a bonus, or birthday money? Resist the urge to splurge and put it directly into your emergency fund. These unexpected windfalls can give your savings a significant boost. Use financial apps. There's plenty of apps out there that can help you save money effortlessly. Popular ones like Acorns round up your purchases to the nearest dollar, and they invest the difference, while Rocket Money helps you categorize and track your expenses. Knowing where your money goes is vital. Stay motivated. Building an emergency fund can feel like a really long journey, but stay motivated by tracking your progress and celebrating small milestones along the way. Every dollar saved is a step closer to your financial security. Now, let's talk about some pro tips to make your emergency fund journey even easier. You can work with creditors. You may be able to adjust your due dates for your bills or use weeks when you have more money to move a little extra into your savings. You can also make your savings automatic. Set up recurring transfers through your bank or credit union to consistently contribute to your savings. Be mindful of your balances. Avoid overdraft fees by setting up notifications or reminders to check your balance before you allow those automatic transactions to go through. You can save through work. Check if your employer offers the option to split your paycheck between checkings and savings account. Now, where to keep your emergency fund? A bank or a credit union account is really safe and a very accessible option. But you can also start to consider a high-yield savings account for some added interest. This means the account pays you back. Avoid debt. This one may be hard, I know. Having a reserve fund helps you avoid relying on credit cards or loans. If you have existing debt, use the debt snowball method to start to pay it off. Become aware of those interest rates so you don't end up overpaying for things that you may not have needed in the first place. Don't be afraid to use your fund for true emergencies. After all, that's what you made it for. If you spend down your savings, work to build it up again. There you have it. 7 steps with some pro tips to build your emergency fund fast. Start today and take control of your financial future. And speaking of your financial future, check out this video where I share the shocking truth about how much you actually need to retire. See you guys next time.